Hello, YouTube. So today we have three daily higher highs and our first daily close back above the 50-day moving average. So this is bullish, but is it bullish enough to get us higher? And what do we do now? That's what we're going to try to answer today. So the first thing I want to go through is actually just talk about what actually happened here around the 50 DMA. On Friday, as we went into the final hour stream, you will note that I was talking about a bullish continuation move. Well, here we are. We're up by 1%. That's not so bad. Why? Well, we're going into the election season. That's going to be tomorrow. And this is normally a time when we go up. So why are we fighting it? The fact that we got right here to our 50 DMA, let's actually have a look and see what happened today because I think it's important for us to just be aware of what happened. 50 DMA is about 379. Let's snap that line. And now let's look here on a 15-minute chart. Why? Let's see how we actually did it. So yesterday, on Friday, we got that high. And then this morning, we gap up, we flag out. We start coming back up to test the high. We break out, volume comes in, and then we just base back above it. That's pretty much what we did on Friday too. Prices cover higher, flag, pop, flag, and we're flagging over the 50 DMA. So with all of that said, even though we are bearish, meaning I still believe we're in a bear market, and we know that buy still being below 384, when we now bring all of our lines back, there's a few things that could happen tomorrow. We could open up, push up. That's scenario one. Scenario one, we're looking for about 381 as resistance above 380. We're almost there, right? 382. Next thing is we go flat. Flat for me right now is bullish. Why? Because we're at or over the 50 DMA by about 1 point right now. If we open up, push down, or if we gap down, I'll be watching really closely to see what happens here at the 50 DMA or 379. In addition to today's low at 375.53, sorry. Why? It means we got a low, higher, low, higher, low, high, higher, high, higher, high. And one more daily close back above the 50 could signal a trend change. Keyword there being could. And now when we look to the volume to see if it confirms the move, not so much. So massive volume on the move down, coming back up, volume's light. So I thought we were going to have an inside bar today. We did not. We pushed higher. So the fact that we have a move higher but no volume confirmation tells me that this just appears like there is a lack of sellers. No one really wants to sell it quite here. So we're looking for follow through tomorrow with the elections being in focus. Now, as we look here to QQQ, we're going to note a lot of those same things. We know we got the lower volume. We know we got the higher high for 3 consecutive days after a bullish engulfing on Friday. So we get a big test here for the Bears and the Bulls, and we bull engulfed it, filled the gaps, and it advanced higher. We're now trying to test our September low. Our June low is still high. Well, actually, we're almost there. So our 50 monthly and our June low is at 269. That level has to get taken out. We still have a lot of room to get up here to about 280 to our 50 DMA. So we have to be very mindful of where we are right now. And the last thing to look at is going to be DXY. DXY on the 1-day chart. This is exactly what we want to see if we're bullish on the market short term. Why? Well, we got two relative highs here, July, and we got September. So as we come down to initially bounce and then reclaim this area, what does it tell you? Well, as we're coming down for the revisit now, this looks pretty good. When China's going to open up, that was pretty much the catalyst. So we know we came all the way down, got our first daily close below the 50, and then today we actually kiss and reject it. I call that the kiss of death. Why? Because the chart's likely going lower now. If it cannot reclaim this area, and on previous attempts, we got our low, we got our relative high, we got, say, lower. Is that a lower low? Yeah, it is. So here's our low at 110.13. Here we got 110.05. So here we got, we come back down, form a lower low, lower high, lower low, lower high. We need to lose this area or lose our relative low at roughly 109.5 or come down and then get another fresh rejection at roughly 109.3. That is how I think the dollar can go lower to support stocks going up. If we stay range bound in this area, I get a little bit worried that we might get mean reversion back to the 50. So the dollar is also really important here. Why? Well, again, there's the elections coming up, so we have to watch the dollar. Looking to the rest of the risk spectrum, we can now note that it's not really moving all that much. We got gold flat, Bitcoin down, Ethereum up. All the trillion-dollar companies actually doing okay. And a really good risk sentiment would be Apple today because they told us that Production in China is actually slowing down, so they might not be able to deliver all the phones they want to. Stock closed green. Woo, right? Yeah. Tesla down, Amazon down, Meta's laying off, and stocks went up. That's exactly what Mike Wilson said he wanted to see. He wanted to see layoffs or actual cost cutting. What does this mean? It means Apple is aware the metaverse losses need to at least be reduced. They can't just lose at any cost. That's what it appears like. So people are in there buying the dip on Meta, the worst performer in the S&P 500 so far this year, down more than 70%. As of right now, still down by about 71. All right, so we did a great job reviewing the weekend video, so I'm not going to go through and talk too much about that. What I want to talk about now is greed, and I say that because the market's currently in greed. You might be feeling it. I might be feeling it. Other people in the market might be feeling it. So if there's greed out there right now, and this might seem like a really basic question, would you rather be right or make money? And 88% of people say they want to make money. I hope that is correct. But just from, again, from my experience, I asked this question for feedback, not to be out there being right. And even in the comment section here, who's not already making money in the question, right? Shake my head. I want to be right all the time. Or in the world of trading, they are the same thing. That is not correct. I think everyone thinks they want to make money, but everyone would prefer to be a keyboard warrior and be right. So I know a lot of people are the silent majority in this video, so please just listen to what I'm saying. The market is currently in greed, which means if you exhibit the warning signs of greed, and other people are starting to get pretty cocky, right? Bullish and bearish. What does that mean? It means now is a time to be mindful that we want to exercise proper risk reward. So even though I put a weekend video that's bullish, I'm telling you today it looks bullish. What's the dominant trend? Well, it's down. It's down on the daily. It's down on the weekly. It's down on the monthly. It's down on the yearly. We're looking for a dead cat bounce, a relief rally, maybe more, maybe less, but that's what we're looking for right now. That cup with the handle that we have to be proven wrong. We have to exit the downtrend. As of right now, that means we got to get above 389. And if you remember from the weekend too, I am looking specifically for weekly higher highs every week. So this 1% is nice. We have to put in an additional 3% for me to say that this rally has legs to continue going higher. We are seeing that over the course of roughly the last 4 weeks, 1, 2, 3, 4, who is leading? Because these are the companies we want to be mindful of, whether there's rotation, are they still doing well? That's right. So we go no group in roughly the last 30 days. It's the largest companies that are currently falling. Apple, Microsoft, Google, Tesla, Amazon, Meta. So on the weekend, we went through and talked about this specifically. So I encourage you to watch that video. If not, please just be mindful. If you're showing warning signs of being greedy, the market might humble you. So please just keep that in mind. And as always, thank you for watching all the way to the end. Please smash the thumbs up if you haven't already. If not, I look forward to seeing you tomorrow. Thanks so much.